Robschild, welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said, "Millionaires don't need astrologers, but billionaires do." And so we begin. Today is Friday, April 19th, 2024. Not really any economic data coming out today. Major CNBC headline that pretty much spells out part of what was going on today. Most of what was going on today. NASDAQ falls more than 2% to post sixth straight day of losing as NVIDIA craters 10%. NVIDIA crashing along with the entire semiconductor industry. I have been talking about for months, it seems at this point, about how much unbelievable speculation is priced into these companies, and it's something that I can fairly well understand. NVIDIA, it has a little bit of name brand to it, but at the end of the day, it's nothing more than something that can produce any other commodity like coal or food. I mean, once you have enough people creating chips, which you do now, you have all these companies. I think even Facebook is making their own chips now. The price can't go up forever, their earnings can't go up forever, and this collapse was easy to see. It was easy to see. And if you were lucky enough to be holding a short like SOXS today, this is a fun ETF that shorts semiconductors. It went up almost 12% in one day. I did not catch this. I actually sold this fund, as I talked about previously in a previous video, at a 25% gain already, and then it going up another 12% today. So if you're lucky enough to still have this for today, good for you. I thought that this would happen, but not enough to continue risking money in a short. I saw the break coming. It came. I got out. I got my profit, and now I'm good. One very important thing about investing I want to bring up in general is you don't need to squeeze every little drop out of the lemon. If you get some of it, good. It's like one of the biggest mistakes, especially newer active investors make, is they hold on to enormous gains and they watch them disappear into nothing. If you take a look at any posts at Wall Street Bets or have any, I know I have a personal friend who has a friend that was briefly a millionaire for a while, and then instead of taking her profits, she bought more into the same thing she had. She lost it all. So, and that's, goes back to the saying, pigs get fat, hogs get slaughtered. Don't get slaughtered out there, guys. It's dangerous. And NVIDIA was not the only N stock to have some trouble today. Netflix had earnings come out yesterday with lower guidance and also suggesting that they were not going to report how many subscribers they have anymore. so that they can keep pretending that they might make more money. I mean, I can't stand the corporate world sometimes. But so Netflix had a pretty big sell-off here, and I just want to note that is this the beginning of? Is it only going to be Nvidia, or are we going to see more things like Netflix coming forward? We have more tech companies saying, "Watch out, guys! The earnings contraction period is here." Another person I watch is Ira Epstein. Like he's been saying, earnings season is starting now. And, the more companies that we see come out having weaker earnings, this can add to, a potentially much longer top that we just had across markets and in stock markets. It doesn't have to be that way, like I've been saying too, the evidence is building. It's not like we haven't seen like the very last nail in the coffin. To see that, we really need unemployment to start shooting up and people to have trouble finding work and that kind of a thing to have a suspicion that, things are going to get progressively worse from here, all while inflation is still high and the Fed is going to have to not cut as fast as they might otherwise because of recent history with how bad inflation has been getting. And that's how I kind of see everything together in a nutshell right now. Being Friday, I have been talking about the S&P 500 looking like a three black crows scenario. Thank you again for the commenter that had mentioned that that's the name of the opposite of the three white knights. And yeah, so this candle closed today on Friday. I've been looking for this. I was saying, like, is this going to really look like three progressively larger red candles from week to week? And yes, we have this. This is a formidable pattern. This tells me there is a high probability of weeks and months ahead of a true bear market setting in that looks like it wants to continue. This is not a weak pattern. This is a strong, strong, strong bearish pattern. Is it possible that we break out of this pattern and go to new highs in the S&P 500? Yes, it's possible, and it's improbable. It's not likely, in my opinion, and by what this chart says to me. Adding to the chaos is the VIX done spiking. Doesn't quite look like it yet, does it? This wasn't a green candle, it's a red candle. So we opened with a lot of fear, and then the fear subsided throughout the day. And so the VIX ended muted, really. But this is in no way this does not look like the top. This does not look like a topping pattern of a VIX in any way. And if anything, it looks like it's gaining strength. We're seeing higher highs, higher lows. Your classic bullish pattern here, and it looks strong here. Part of the reason I got out of my short in the triple Qs, unfortunately a day early, I mean, again, pig, not hog. I got out. I got fat. I got plenty fat. I didn't get hoggish, and I didn't get slaughtered either. But I digress. The S&P 500, this wedge pattern that everybody's been seeing and talking about, and how we broke out of it and confirmed it, it was just very obvious to lots of people that this was going to break down. But now the question is, how far down? So, you take a look at the size of this wedge. What are we, almost halfway down this wedge already? And so, from here, from a chart standpoint, it's like, yeah, anything can happen. I'm not sure enough on my bearishness to be short. I just don't, the shorting thing, it's so much more risky than just finding something cheap and buying it and holding it and waiting for the market to be like, oh yeah, that's actually worth something, than it is to short. Because when you're shorting, you're depending on people not gambling, basically. And people love to gamble. And that's pretty much the whole story there. HYT, high yield corporate, the money that smaller companies have to pay higher amounts for to borrow. And the further this goes down, the more risk there is and the more expensive smaller businesses become to operate. This while the stock market is still collapsing, this is still bouncing higher. To me, this is a bit of a divergence here. This is saying, you know what? Don't be too afraid here. Now, can this turn over and keep going down? Yes, it can. But it is very interesting and very notable to me that this had bounced here and is showing a little bit of steadiness here at this level in HYT. Now, also, three black crows, 1, 2, 3. Overall, I do think that this continues lower, but in the immediate short term, for the next 3 days, I don't know. Could we see a big, very large bounce in the equities market? I think so. Does it matter? It doesn't really matter to me. I'm not buying this, and I'm not I might short again. Okay, if the stock market gets back up to certain levels, especially near the where we broke out of that wedge uh, before, I could see myself going short again if the market gets stupid there, and we're still and everything else is screaming that this is a bearish market. I might do it again, but if it keeps going, yeah, I don't know where the bottom is, and um, yeah, I'll wait till things look terribly undervalued and then start buying stuff. You know, part of the thing with the uh, treasury bonds is, you know, in the last part of a stock market collapse, everybody runs to safety, and treasuries tend to spike in value. That's my whole plan with this. I want to be holding lots of treasuries when the value spikes, so I can sell them at that time to get into high yield corporate, which, you know, if you time it perfectly, um, with your crystal ball and all, you can again do pretty well for yourself. Same thing in the triple Qs, the Nasdaq. You know, as the S&P 500, this wedge we broke out, we're already pretty far down into this breakdown. Like, I'm happy to have taken the profits there on that short again. Fear and greed index, more fear. We are getting more fearful. Now, interestingly, you know, where do I think we go from here? Can we go back up to neutral? Can we go back into greed? I think we can. I think we can temporarily. I do think we are at a longer term top here. You know, when I was calling the top, part of this is actually something Gareth Soloway said too. You know, his perspective is that Fed Jerome Powell recently came out and was like what he describes as max hawkishness, and how that can be like, okay, that's like the top here. But um, he was talking more on the yields, but I'll forget about all that. It doesn't matter. All right, I remember what he said now. When he was talking about max hawkishness, he's referring to where yields were, and he was saying how yields had bottomed out when he was like max dovishness, and then he thinks we're at max hawkishness, and so another reason to go to be in treasuries. I mean, I love being in treasuries right now. Again, like I said in previous shows, we're only about 325 basis point cuts on the short end of the curve to match the longest end of the curve and the 30-year bond yield. And so I think this is just a very, very opportune time to be having treasury bonds. And at the same time, if this does turn into a secular bear market where it's just going down and down and down and down and down, and you know, for a year, for 2 years, this bonds should do well, because when that's happening, people want safety. They want safety of return, and this, you know, 4.6% return on a guaranteed treasury, while companies are able to earn less and less money because of the cost of borrowing, which, you know, the cost of borrowing is high because of the treasury is offering such a high yield. You know, their bonds have to offer a higher yield as well, which squeezes profits. It's just a part of the whole. It's not even. This isn't hard to think through and see, like, so. But yeah, for all of this to play out to my exact advantage, yes, the Fed will get what they want, which, if you believe in not fighting the Fed, they probably will get what they want. They want earnings contraction. They want to slow down the economy. The whole point of it all is to lower inflation. And, you know, they need to strangle the companies and the economy and the earnings in order to get what they want. And as that happens, like I'm saying, it forces yields lower, and yeah. So one more chart. I've been talking about the Brazilian ETF EWZ from a chart perspective pattern and evaluation of their stocks. Looking at that, it seems like a historic opportune time to be investing here, just because we have this trend line hitting 1, 2, 3, 4, 5, 6 times, and the 7th time very recently. I've been talking about in various shows how we broke out higher, and we've been bumping along this trend line, and this week we broke below it, and that for me is a danger sign. However, for trend line analysis, you need in order to not have this in order to confirm that we are now staying under the line, what you want to see is the bottom of this candle be closed the next week below the bottom of this wick here. And so we need a close next week on Friday below 29.87 in order to confirm. Otherwise, the more likely outcome is that we can easily get right back above this ultra uber trend line here. And if we can get above it and the market starts waking up to real valuations of companies that are full of cash and giving them to the people that own these companies, it's like I still see this as a good place to be. And so I had been talking about getting a little scared off in this, and but no, I'm not at this point. If we do close below that, I might end up taking a loss on my 1.8% portfolio position in the triple leverage fund of this, which is BRZU. It's leverage. So if this thing goes to the moon, that amount blows up like you wouldn't believe. So I'm still comfortable holding that, especially with only a very small part of my portfolio. But anyway, wanted to bring all of that up. That's all I have for you today. I hope you enjoyed watching. Thank you for watching. Robschild.